Welcome and thanks for stopping by. I'm Digital Micro. You're on the Digital Micro Trading Journal channel. Day trading for an ROI payout. It's just my trade journal rule-based price action trading. Before I push any buttons, I've got to analyze the charts. Daily affirmation. I see it and understand. Rigid discipline and rules. Flexible in outcome expectations. Independent thinker. Impeccable risk manager. Precision-based trader. Responsible business manager. Friday. Thank God it's Friday. September 22, 23, ES price action levels. On the left, ES continuous contract. And I've talked in previous videos and I've journaled how this monthly fair value gap created on this big green bar from June. You see this September black bar, the body of the candle is digging into this monthly fair value gap. However, on the December contract, you can see I've got a weekly yellow block fair value gap, and then the monthly fair value gap. It's a little bit different on the alignment, so that's why I look at both the continuous contract and the December contract, and this is just straight down weak. So I haven't found my entry. I sat out Thursday completely, no longs in September for me. And I don't have a short entry as of yet, and I don't expect one for Friday, even though I'm anticipating a bump up. So what I'm looking at here is just the levels. On the right side is the weekly. On the left side is the continuous contract monthly. And again, let's drop down to some lower time frames, but this is the top higher time frame on the ES Mini. This is what frames if there's an opportunity, and I'm just not seeing it. So again, traded 3 days out of 5. That is fine. Pat yourself on the back if you came out with positive ROI for the week. Definitely anybody that's getting 1% or better on a week like this in September with seasonality, you've got to be okay with that and just go on to the next week. So that's what I'm doing, conserving mental and financial capital. Next chart. Okay, on the left side, we've got the ES Mini daily 24-hour chart. And again, you can see this tan 24-hour black bar going into the middle of the consequent encroachment of the monthly. This is on the December contract, not the continuous contract. And what I'm looking for, if not today, Friday, on the weekly fair value gap, that's the yellow rectangle down here. I think we're going to hit that sometime next week. Right side is the dollar. That's helping me understand that it's still risk off for the indices and the currencies that are not the US dollar by this green bar above the blue line. And above this yellow rectangle, that's a monthly fair value gap. I do think that we can get back up in here with the US dollar, and these little yellow rectangles on the US dollar are fair value gaps on the 24 hour. So again, these are the 24-hour charts, ES on the left, dollar on the right. So I do expect with this little stubby green that we've got a chance to go back up to maybe 43.92. That's the consequent encroachment of the monthly. I'm not really expecting anything, and again, I'm not taking any longs here. This double red line here, I'll just open it up. That is both the London and the New York midnight open for Friday, and so I'm not really touching that. That comes in about 43.7950 by 43.80 and a quarter. So there you have it. Those are the levels. Nothing really exciting. Let's go to the next chart. Okay, this is my 24-hour chart with a 9 EMA blue, 18 red EMA. So I only use these EMAs on the 24-hour chart, and what I specifically look for is 2-day air, and that means we've got a gap on 2 days here, Friday being the second one, and I want to see that we don't touch the blue, so that means Monday potentially I'm looking for this to recalibrate price back up to the 9, not necessarily to the red, but at least to the blue 9 EMA. So this is a very common signal I've used for years. It's been reliable. It's the only EMAs I use. It's got to be on a higher time frame. And then you've got these levels I've already pointed out. 15-minute fair value gap in red, daily fair value gap in yellow, and way up here above the 18 red EMA is that 1 minute FOMC fair value gap. I don't think we get back above that unless, again, there's some big news event, Congress unlocks and gets a budget. We'll see next week, but no motivation here to be short in the hole after these two big candles down post FOMC, and here we are with the green stubby. I am looking at the 921 RTH prior day 4415.75, and again we talked about these two red railroad tracks. So that wraps it. I'm just really centered on how we end the week here, and if we keep a lot of air below these EMAs, that's a big tell for me. I'm in no rush. I want to preserve ROI for the week. I was super cautious. It paid off. I was in no rush. ROI was there, and a lot of people, I think, got hurt and smashed to bits if they took over-leveraged bets and trying to catch a falling knife. That wasn't what I played, and again, it was the seasonality here. So again, possibly some kind of dead cat bounce next week as we end up having the last full week of September. We'll see how it goes. Thanks so much for watching. Take care and aloha. Bye.